There we go. Good morning, traders, and welcome to your live market brief with me, your host. So, question for today, as always, how I start my session. So, what do you get when the yen trips over its own caution and Cardano swings harder than a crypto on caffeine? Well, you get a Tuesday morning market action where fundamentals are clashing with sentiment and traders are left wondering if buy the dip still applies to everything. As stated, welcome to the session. I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief, where each morning I unpack the biggest movers across currencies, commodities, indices, cryptocurrencies, and, blending your fundamentals, your technicals, and, just the right amount of common sense. Because, let's face it, markets don't always make sense. Please take into consideration that everything that I will be sharing with you during this session is not for, or should not be construed as financial advice. Everything that I will be providing during this session is for informational purposes only. So take it as you may and then go and apply as and how you want to. Okay. That being said, let's get into the session. I do see that I'm having a bit of technical difficulty here on my side with my trading view. So for some reason, this morning it was working fine and my Wi-Fi is more than fast enough this morning. But for some reason, TradingView just decided it's clocking out for the day. It's just loading forever and a day. Luckily, I have saved my analysis, so I'm still going to be sharing that with all of you today. And for the smaller intraday setups, we're going to go very old school today, and that means we are just going to be focusing on MetaTrader. I haven't actually done analysis on MetaTrader in forever, so it's going to be fun. Obviously for me, MetaTrader is an executional platform only, so it's the best executional platform. But from an analysis perspective, I just really enjoy TradingView. Again, personal preference. If you do have any questions for me, please feel free to pop it for me into the chat section. If you are unable to leave me a comment, it's because you haven't subscribed yet. So please remember to click that subscribe button. Click the like button as well. I'd really appreciate that. I see Roadcasters having a very nice conversation there already in the chat section. So yes, if you do have any questions, please let me know and let's discuss it from there on forward. So let's kick things off today with currency. So I want to start with USD JPY. So the US dollar continues to command attention at this point in stage due to a range of reasons, okay? And we are seeing the dollar index at the moment climbing towards 100, which is its highest level in 3 months. Now, this move wasn't sparked by fireworks, but by a subtle shift in tone from the Federal Reserve. One that reminded traders that rate cuts aren't guaranteed just because inflation is easing. Last week's rate cut gave markets a temporary boost, but the optimism faded after Federal Reserve officials hit the wires with cautious remarks. Governor Lisa Cook admitted that risk in the labor market is growing, yet she stopped short of endorsing another rate cut in December. Additionally, Chicago Fed President Austin Goolsbee went even further, doubling down on inflation concerns and signaling that price stability remains the top priority. This all resulted in traders quickly repricing their expectations. The probability of a December rate cut dropped from 94% to 65% in a matter of days. That kind of adjustment says a lot, traders. A massive amount, to be exact. Investors are realizing the Fed is not yet ready to, well, take its foot off the brake. Meanwhile, recent ISM manufacturing PMI data showed the factory sector contracting for the 8th straight month, underscoring that growth momentum is fading. Prices paid also softened, hinting that inflation pressure is cooling. But apparently not enough to convince policymakers that the coast is clear. Now, the market is ready to turn its attention at this point in stage, specifically to tomorrow's ADP employment change and challenger job cut reports, both of which will offer fresh cues on how the labor market is absorbing tighter financial conditions. Now, please remember that the government shutdown is still ongoing, which means the probability that we are not going to have NFP on Friday is massive. At this point in stage, we are not having NFP. Okay, NFP, as we are speaking right now, is cancelled for Friday. So unless anything changes between now and Friday, we're not going to have NFP. But ADP is a private report, so it's ADP non-farm employment change, which is the private version of NFP, which normally we all just used as a precursor, a leading indicator for NFP. Now it's NFP. So I will be analyzing that release live tomorrow afternoon at 3 p.m. South African Standard Time. So come and join me for that, because, well, that will be our primary insight into what is currently going on within the US labor market. Sticking to USD JPY across the Atlantic, the Bank of Japan remains the outlier in global tightening narratives. After leaving rates unchanged last week, the governor reiterated that global trade headwinds and fragile corporate profits justify a, well, go slow approach. Even with inflation in Tokyo running above 2% for over 3 years, the Bank of Japan continues to signal patience, much to the yen's disappointment at this point in stage. Now, the result of all this is the yen is hovering around 154 per dollar, its weakest level in 9 months. And because of that, intervention chatter is growing louder. And while the finance minister has distanced herself from her earlier fair value comments, her message that authorities are monitoring FX moves with a high sense of urgency suggests that Tokyo is watching closely. Again, as I stated earlier, I am still having some issues with my trading views. So and I'm actually looking, my chart's still just loading. I don't know what's going on. So I am going to pop up a chart now, but the chart that I am going to be popping up now is analysis that I did earlier today and just saved. Luckily I did. Otherwise we would have nothing to show. So let me do like this. There you go. Okay, so actually let me do like this, and then what I'm going to do is just on this one. Here we go. Just need to zoom out a little bit here at the moment. There we go. Yeah, let's do something like that. I think that works. Okay, there you go. So technically, USD JPY remains well supported above this support level sitting here at 153. Now, momentum is favoring a potential retest at the moment of this high level here at 154.5. The big question here is, will Japan act before the Fed blinks, okay? Because in a battle of caution versus conviction, someone eventually has to move, and that's kind of what we are waiting for right now, okay? So definitely a lot going on here at the moment, and I am going to also pop up my MetaTrader so that we can have a look at some lower time frame options. So here we go, USD JPY. I'm on a 5-minute time frame here at the moment. Now, as I said, momentum is favoring a retest of this high level here at 154.5. Now, we can see on this 5-minute time frame, we have basically now broken that trend, that little bit of a downward trend that we've been having since early this morning. And now it's relatively consolidating here at the moment. Now, here we go. So that is the general resistance zone at this specific stage. So if we can get a break of structure here, now this is now where we are sitting at the moment. So this general area here, that's our change of character at the moment, relatively confirmed on USD JPY. Now what that would need to do from here is a break. I want to see if I can add an arrow in here. Let's see here. Yeah, here we go. So that will basically need a break above the zone, which then would need to see a retest of the zone and then that break of structure. And then we'll be able to see a nice little setup from here, potentially retesting those higher or those high levels back at 154.5. So from a lower perspective, that's kind of the setup at the moment. Otherwise, we need to wait for a potential break lower again, which would then create a new change of character, seeing that we just had a change of character. And then we have to wait for a retest for a dip lower on this one for a break of structure lower. But that would take quite some amount of time at this specific stage. I think at this point in the stage, our biggest bet for today specifically would be a little bit of a break higher, retest, break of structure, and then we can trade from there on forward. But just obviously waiting for price action to do what it needs to do first. We see some comments that we got there. Wow, that is a huge percentage drop. That really was a huge percentage drop, and I'm guessing we are specifically referring to the odds of another rate cut in December, which is definitely shifting focus a lot at the moment. Okay, I will be there tomorrow at 3. Fantastic, looking forward to that. My trading view is doing the same. Okay, yay. So that means it's not just me, it means it's a trading view issue. Because I can actually, I'm not going to show you guys now. But yeah, at the moment it's just loading. So if someone else is also saying theirs is just loading at the moment, it does make me feel a little bit better, because that obviously means that the issue is not on my side. Because like I said, my Wi-Fi and everything is more than fast enough. So it could just be that TradingView is experiencing some technical difficulties and that they are temporarily offline. Okay. That being said, however, let's move on. Moving over to commodity. Oh, sorry, not commodities today. Cryptocurrencies today. And today I'm focusing on a cryptocurrency that I haven't discussed often in the past, which is ADA, also known as Cardano. Now, the crypto market has entered into what feels like a tug of war between fading momentum and lingering optimism. Now, Cardano was among the hardest hit yesterday, tumbling a massive 10%, which was its largest single day loss in nearly a month. Now, it did recover a little bit, around 1.4% this morning, and is currently trading around 56 cents at the moment. Now, this kind of price action isn't just volatility, it's the embodiment of uncertainty, and this is what we are seeing at the moment. So, on one hand, investors are still digesting a broader correction across digital assets. But we are also seeing, Bitcoin slipped below $106,000. Ethereum fell to around 3,550. Both retreating from recent highs as profit taking has also set in. Then on the other hand, structural optimism still remains though, okay? If we have a look, Cardano is still up 33% over the past 4 weeks and 67% over the last year, highlighting its longer-term resilience amid, the crypto roller coaster cycle. Now, the macro backdrop hasn't helped crypto either much at the moment. I mean, the Federal Reserve is sounding more hawkish. The dollar strength trend tends normally to pressure risk assets, and cryptocurrencies are often the first to feel the squeeze. Now, add in thin liquidity and algorithmic trading, which is amplifying intraday swings, and well, you get the perfect recipe for exaggerated moves. Okay. Looking at the charts at the moment, there we go. From a technical perspective, ADA is caught between the support level down here at 52 cents and the resistance level here at 61 cents. Now, it has also been trading quite some time in this downward channel, which if you go over to a 4-hour time frame, which I would have showed you if I could change my view, but I can't right now. So yes, has been trading in this downward channel and now currently stuck between that range, as I stated, between 61 cents and 52 cents. Now, a close above 61 cents, so above this level here, maybe even 62 cents, would be a safer area, because that's that high point there, that red line that you are seeing right there. So if it closes above $62, this could trigger a run towards 65, which is also the high point of the actual channel. Now, on the flip side, if we get a break below 52, we will also break out of this channel, which then exposes that psychological 50 cents, which is significant because it marks the midpoint of Cardano's October rally. So, in simpler terms, bulls want stability. And on the other hand, bears are waiting for one more stumble. Either way, the next few sessions will test whether this recovery has legs or if it's just another crypto fake out, and that this is heading for a little bit of worse times. Tell me in the comment section, do you guys trade cryptos? Yes, no. This is such a great instrument actually to generate nice intraday profits. I've literally for the last while been actively on an intraday perspective, been trading Ethereum on a daily basis, and it's been generating a ridiculous amount of profit just by using basic price action and trading smaller swings, for intraday, because of the fact that it moves a lot bigger. So yeah, are you guys capitalizing on this? Yes, no, maybe? Let me know. Misha, hello, I'm in East London. I kindly request gold analysis, please. Thank you. Funeka says yes to cryptos. Cool. Rocast, not trading crypto as yet. Brother, maybe it's something to look at. I mean, from an intraday perspective, there's definitely so much going on at the moment. And there is definitely the ability to do a lot more on an intraday perspective to, as the moves on smaller time frames even, it's so much larger than the rest of the market. And yeah, So definitely something to look at and to basically potentially expand your portfolio in that regard. Let me see if my trading view is back up yet, as we do have that request for looks like it. Stuff was starting to move again. There we go. Okay. So my trading view is back up. So what I can actually do now again is I can wait, that was the wrong one. I need this one here. So let me zoom in here again for you guys. And there we go. Okay, so we are back online here. So let's look at gold real quick, which was requested. So gold is currently stuck in this relative range that we can see here. Hasn't really done much lately, and from an intraday perspective, whenever gold starts consolidating on this level, I normally start backing off a little bit. Because I mean, even if we go down to like a 5-minute time frame, you can see here that the actual, well, the range is high because, again, gold's volatility lately is still massive. I mean, even if you just look at this morning's move, that entire move there, that's $30 on gold. Which normally used to be huge, but I mean nowadays on gold that's relatively small. So on a larger time frame, so 1 hour time frame here, gold for me at the moment still stuck in this range. So either what I want to see is a break of structure below this 3,965, which would then give us a break potentially down to this low point here at 3,890, or if we can get a break above 4,030, that could lead to a potential retest of the high point of this channel at 4,100. Now, on a lower time frame, so if we're dropping down to the 5-minute time frame now, at the as you can see here, we've had this nice little momentum here. We've got a bit of a change of character here, now a bit of a retest. So there is potential at the moment if we get a break of structure below 3,990, which could then set us up for a very short-term little scalp trade, 1:5 risk to reward. So 1:1.5 risk to reward, which will then come for another retest of the bottom of the channel. Otherwise, what we will have to wait is for a break of structure above 4,000, which would not be a break, it will be a change of character, sorry, above 4,000, which then needs to just come back for a retest, and then we can potentially look for a little bit of a move higher from there. Misha, I hope that helps. Let me know how this correlates with the analysis that you have at the moment and with what you are seeing. Can you also consider comment on CAC 40? Wow. Sure, I really don't mind. It's not a chart that I look at often. I'm gonna be very honest, but as I've always said, price action is price action. You know, it's not really that really ever differs. So I'll be more than happy to pull that up for you. Just give me a second, just to find it here. So looking at the charts here at the moment, I'm definitely seeing a massive gap here this morning. Well, not even this morning. Was it this morning? Monday. Yeah, between the close last night. See, this is again, it's like trading DAX. There's certain times of the day where the index is completely closed. It's not like NASDAQ or S&P or Dow that's open 24 hours a day. It physically closes for like, well, this one more than 10 hours. It's almost 12 hours that this actual thing was closed. So yeah, widely on par with yours again. Fantastic. Thank you so much. We are on the same page. Yeah, I love that. I love that. So I would say let's just pop onto a little bit of a higher time frame just so we can see some general price action and just see where the market is sitting at here at the moment before providing commentary on this. So there is clearly quite a lot of support in this general area over here. So, and then this was a key level that was broken there. And we have another level in this general area over here. But nothing much in this little bit of a dead zone that we are seeing here at the moment. So dropping this down to some lower time frames now. It's a little bit difficult on an intraday's perspective. Yes, we've got this big move down, and now we've got a little bit of a break of structure here about 5 minutes ago, which technically speaking means there's a very short little scalp trade set up. Basically, if you go 1:1 ROI on this, or ROR on this one, aiming for the support level down here, that's an option. Not a good option, but it is an option. This gap makes it really difficult at the moment, but I think there should be some nice opportunities once we actually get down to the support here at the bottom, and then you should be able to find some direction and clarity from there. If there's a nice little bounce, it could come back for a retest, closing that gap as well. So back up here to about 8,100, or if you see a bit of a break below the support here at 7,900, wait for that retest, and then you could potentially aim for this 7,800 level in that regard. Like I said, not really something I trade often, just because as well, like, you can't trade it all day, which makes it a little bit difficult, because you have to trade specific times for this to work, which normally also, adds to volatility because of these gaps that it can have from time to time. So yeah, Funeka, I hope that at least helps a little. Let me know. The index that I did want to have a look at today is US 30. So the Dow Jones, which was actually the only US index yesterday that closed lower, and it closed 0.53% lower, shedding 251 points after investors took some profits following last week's rally. What was interesting is that the sell-off wasn't broad-based. It was selective. So traditional industrial names like Merck, Nike, and 3M is what primarily pulled down the index yesterday. I mean, Merck dropped 3.9%, Nike 2.8%, and 3M was down 2.6%. But while this was taking place, heavyweights like Amazon, Nvidia, and Cisco kept that AI-driven optimism alive. I mean, Amazon was up 4%, Nvidia 2%, Cisco 1.8%. So the big story fueling sentiment specifically yesterday was the $38 billion partnership between Amazon and OpenAI. And that's why Amazon spiked 4% yesterday, which reignited enthusiasm around artificial intelligence and cloud infrastructure spending. Investors is seeing this as confirmation that AI investment cycle isn't slowing as yet. In fact, it's accelerating. That optimism is helping, or yesterday helped, NASDAQ and the S&P 500 close higher, even as the Dow dipped a little bit. But beyond the AI headlines, the macro picture is, far from rosy at this specific stage. Talking about that ISM manufacturing index again, that came in at 48.7, which again was the 8th consecutive month of contraction. In plain English, factories are still shrinking. Now, combine that with the prolonged government shutdown, and which is now on the brink of becoming the longest one in history. And, well, you've got an environment where optimism is colliding with uncertainty. Okay? Now, if we have a look at US 30 on a chart at the moment, there we go. As you can see, dipped since this morning below 47,000. So now it's facing support. The next support level would be here around 46,400. 47,100 would now become that first line of resistance. So if this comes back for a retest, it could push even lower. Higher resistance is still sitting up here at 47,600. But even though we are seeing this pullback at the moment, the index is still remaining up over 11% year on year. So short-term momentum isn't flattening at the moment, but if the shutdown drags on or upcoming corporate earnings disappoint in any way, we could see rotation away from industrials and back towards the tech names driving the AI boom at the moment. So, flows might go out of the Dow Jones Industrial Index into something like the NASDAQ 100 or S&P 500, and not so much, focusing on your blue chip stock companies right now. So this is all because Wall Street seems split between two realities: the economy that is and the one investors hope AI will create. So definitely quite a bit to look at the moment. Okay. Let me just read some comments here. Wow, first time I see so many gaps on a CAC 40 chart. Are those all fair value gaps? In essence, yes. So in essence, Rocast, you are correct on that. Dennis, welcome. Funeka said, thank you so much. Only a pleasure. And then Rocast, I've added the Magnificent 7 to my watch list. If you are trading NASDAQ 100 or S&P 500, adding the Magnificent 7 to your watch list is definitely worth it. Because remember, both of those indices are not evenly weighted. So based on market cap, a company can hold more weight within the S&P and the NASDAQ 100 specifically. When we look at the Dow Jones Industrial Average, the Dow Jones Industrial Average is an evenly weighted index, which means all 30 companies count the exact same amount of weight within the index. So the Magnificent 7 doesn't have that big of an impact because, like you saw now, other companies dipping, even while the largest companies in the world are growing, is still creating a pullback on the index because everything is evenly weighted. Now, on something like the NASDAQ 100 or the S&P 500, where they are not evenly weighted, there's more opportunity for the Magnificent 7 to have a greater driver behind everything. Okay, so yeah, if you didn't know that, there's a little bit of trivia for you for today. So yeah, hope that helps at least. So as I stated as well, please remember that tomorrow the spotlight will turn to ADP Employment Change Report, where if we see a strong print, that could reinforce the Fed's hawkish stance and keep the dollar riding high at the moment. But a weak one might just give the market a reason to bet on that December cut once again. And who knows, maybe Cardano's next swing will make Bitcoin look calm by comparison. So, there's definitely a lot going on in the markets and definitely a lot that we can take from that and apply to our daily trading. I hope you guys found value in today's session. If you did, please let me know. Please drop me a like as well. Thank you for everyone who participated and asked questions. I really do appreciate that. It does make the session a little bit easier on me specifically if we are having a bit of a conversation. It's never easy just sitting here talking to yourself the entire time. So, on a different note, you all know that I love trading the S&P, and I just want to show you all here at the moment. So, if we have a look here on the hourly time frame, the S&P has now pulled back this morning after showing some gains yesterday. Literally this morning, it's been on this mission down, but. And again, not financial advice, just showing some price action here and so forth. So if you have a look now, we are sitting quite solidly on this 38% Fibonacci retracement level, based on the low point from the 17th of October all the way to the high point that we had on the 30th of October. So this could act as quite a nice support level, and even if you go back, I mean, there was quite a amount of price action here, so we might see some buy the dip trading coming back into the market now, which could be a really nice, not intraday, but day trade setup, which could definitely set you up quite nicely with a much larger potential on this. Pushing back just for a retest on that all-time high. This could be quite a nice setup. But again, let's just wait for price action confirmation on this before jumping into the trade, as it could break to come and retest this 50 fib. But definitely a nice little buy the dip scenario that is slowly coming into play here, and we can even see on the 15-minute time frame there's a lot of consolidation now on this level here. So the moment price action kind of confirms the move here, I'm definitely going to jump in on this personally. But yeah, so this is creating some nice opportunity for us here within the market. I mean, even looking on the 5-minute time frame. So if we can get a nice little break of this general area here, that can definitely set you up quite nicely. If we can get price action to confirm a reversal on this 38 fib. So, but again, it would require a little bit of a break of this consolidation area that we are seeing at the moment. So just a little extra one that I wanted to throw in there. Like I said, you all know I love the S&P. So yeah, I just wanted to add that in there for today. Any questions from anyone? Let me know. Be happy to answer. Other than that, I think then we kind of have come to the end of today's market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Now, if you are one of that very few traders that are not trading with ATFX yet, click on the link in the description or head over to atfx.com and go and experience the difference for yourself. Okay. Traders, thank you so much for joining me for another live session. I will see you all tomorrow afternoon at 3 o'clock for ADP Live. So please come and join me for that. You will see it's already scheduled on our channel. So click that subscribe button, click the notification bell so that you get a little pop-up the moment we go live, which makes that you don't miss anything. Until next time, traders, stay sharp, stay focused, and trade smart.